Everybody, this is John, and welcome to the free video. So today, ECB came out and said, yes, we're going to be doing lots of quantitative easing. And the correlated assets went wild. I'll cover all the correlated assets in the premium video. Stock market, though, broke out, and you can see here that the put call is neutral, meaning that people are not loading the boat on calls. When they're loading the boat on calls, you're typically near a topping point, which means that we have more upside here, okay? All right, so this is the account that I set up specifically for the trading room, tracking the trading room trades, tracking class trades, tracking silver portfolio trades. So for our trading room portfolio, this order has not been filled yet up here. This is what we're looking at. So the Buffalo Wild, this was a position we put on a couple days ago. Nice recovery today. You can see right now it's still down a little bit. CMG, we put that one on today, texted it out, nice move. FireEye. Open P&L, fine, but a little soft today. Google actually did a call credit spread on that, and you can see here that we got a loss on that one because Google exploded higher. ISRG, that was an earnings play. We'll take a look at that. Netflix has been a really solid one, and then Starbucks, T2. So pretty decent day. I mean, this is we set this up at the beginning of the year as a $155,000 account where we're going to track all these trades and all that kind of stuff. So that was the trading room. The silver portfolio right now has that one, and so that's where we are right now. So the earnings play that we did today was Starbucks, and I did this long. Usually I'm selling premium, but this one I did specifically long, and the reason for this was that coffee is trending lower. And if coffee is trending lower, I know you guys have been to Starbucks lately, but I have noticed that they're not offering a discount. So I made the assumption that their profits would be higher. So earnings trades are always tricky, right? Because you have the idea with that is that you have explosive premium and it's hard to make a profit buying options. So this is what we did. At this point, when we placed this trade, I think Starbucks was at about 82.50, and looks like after hours it's at 86, so that's good, and it's actually better than the expected move. So in this case, what I did is I sold the 82.78 put spread, so assuming we open up there, that'll expire worthless. That expires tomorrow, but then also bought the $80 calls for the next week, because while the premium here was 65% for this week, next week, the premium was actually pretty low. It was normal. So that's kind of a nice way to take advantage of that. So at this point, it looks like it'll be a pretty good trade. In retrospect, I probably should have just bet the entire farm on it, but a normal position is fine. So anyway, that's one way to kind of do an earnings play. And we did this one in the room today and texted it out. So other than that, the dollar index today had a huge move. Man, already at 94. That's going to continue to put downside pressure on commodities. And of course, the main thing it's going to put downside pressure on is FXE, which continues to get destroyed. And there's going to be more of that continuing. And I'll talk more about kind of the big picture stuff there. And then last but not least, let's take a look at Netflix, because this was a fun trade. So we got up, did an earnings trade that actually didn't really work out, got the gap up, sold a put spread to offset it, and then bought some calls looking for that move to 428. So how did we do that? Let me bring this back over here and we can take a look. So I started off, and again, these are all stuff that we did in the room and I texted out. I started off doing an at the money kind of iron fly, where I sold the 345 put and a 345 call. You can see they were like $20. But then, in case this thing went beyond the expected move, I bought some protection, bought the 390 call, bought the 300 put. Max loss on the trade was about $1,300. Well, guess what? It exploded through and I got max loss on the trade. Well, the next morning, I sold the 400 395 put spread with the idea that that would be enough to offset. And the nice thing about this is that you can, as long as your risk is limited, you don't want to do this with unlimited risk, you can offset your loss. So I calculated how many contracts I'd need based on the move and ended up making $1,600 from that to offset that loss. So that's great. I could have actually done a few less contracts. And then as a new trade, we got a squeeze signal, bought 10 of the 405 calls at 1420, and then as it rallied to today to 423, sold the 425 calls and the 430 calls that expire this week. What I thought was that, we may go through 425 and then we just close that out as a max profit debit spread. But hopefully we close below 430 because I'd actually like to keep some of the calls over the weekend. But if it does go through 430, then I'll close that one out as well. But that's the idea, and that's why we did it as a diagonal. All right, so that's what we have. So I got a ton of stuff to cover in the premium video. Hope that helps. You guys have a good night, and we'll see you at the next update.